Another day, another piece of drama that's killing Google stock. I mean, it really never stops. I mean, the stock starts going up, shareholders get excited, everyone loves the stock. Then some kind of news comes out related to AI. The stock goes down 8 or 10%. People start calling Google dead. No one likes the stock anymore. They give up on the company. And once everyone gives up on Google, then Google starts going up again. And then some kind of news comes out, and then it goes down another 8 to 10%. It has been brutal. And we recently had the same event. The stock went down 7.5% on Wednesday, and it's still down over 9% over the last year. And it hasn't been a good year in general for Google shareholders. So I'm going to address this issue today and talk about it and talk about the stock. But this one kind of reminds me to another piece of drama that came out on the stock back in November of 2024. And that was whenever everyone was claiming that Bing was going to kill Google, that Bing is going to come out with some kind of search engine or whatever for AI, and that's just going to kill the Google search business model. And people really believed in that stuff. So I posted something very funny on X, and this is the most searched word on Bing. So whenever people go on Bing, whatever they search for, the most searched word was Google, which is really funny. So people go on Bing, they don't even want to be on Bing. They go on Bing to search for Google if Bing is their default search engine. The second most searched word was YouTube, which is owned by Alphabet. And the fourth most searched word was Gmail, which is also owned by Alphabet, which owns Google. So to me, it was very funny that everyone was believing that Bing is going to take over Google when people couldn't care less about Bing. And they go on Bing to search for Google, they don't even want to be on Bing. So to me, that was just very funny how that played out. And this one is, I wouldn't say it's the same, but it's kind of the same effect, which I'm going to talk about. But this is Google going down on reports of Apple planning to integrate AI search into the Safari browser. And that came in, I believe, some kind of a trial around the Google's anti-monopolistic lawsuit, which they had. But this is what this person said. He said Apple won't replace Google as its default option out of fear of losing the revenue its deal generates. He said he believes AI search apps will eventually replace standard search engines. So Apple will most likely not even replace Google, which I'm going to talk about. And we all know that over time, those AI kind of search apps like Grok on X and many others, they will eventually take market share from the Google search engine. And Google knows that. And that's why they've been diversifying their revenues over the years, which I'm going to talk about very soon. But the deal is much more valuable for Apple, in my opinion, than it is for Google. And everyone likes to talk about how this is so bad for Google, but no one really talks about how bad this is for Apple. But Apple relies on Google's deal for revenues as part of its services business. Everyone talks about how amazing the services business is for Apple and how much money they make from this business. Well, Apple made $96 billion in 2024 from services. Out of the $96 billion, $20 billion came from the agreement of Apple putting Google as a default search engine. So if Google was ordered not to pay Apple $20 billion, Apple's going to lose around 25% of the services revenues. But yet Google went down 7.5% and Apple was flat. So to me, it's just really funny how the market is reacting to those things. So if that does happen, although I don't think it's going to happen, but if they force them to during the lawsuit for Google not to pay Apple $20 billion, then, Apple will lose $20 billion, but I still believe people will choose Google. Google became a name where people say, I'm going to Google this. They don't even say, I'm going to search for something. Most people, they just say, I'm going to Google something. So yes, I believe, I'm not trying to downplay the threads, but I believe Google knows that over time, those kind of AI search platforms will take market share from Google. It hasn't happened so far. Google is still growing in terms of daily active users, 13% year on year as of April, and it's been actually going up. So I'm not seeing any kind of effect, like real data, that, Google is going down. Yes, some people, and maybe yourself and other people, are maybe using ChatGPT or some kind of other platforms. You're not using Google as much, but most people globally are still using Google, and the daily active users are actually picking up. But Google isn't just about Google search. Google has YouTube. They have Android Android and maps, which no one talks about. This is insane kind of part of the business, especially the maps kind of business. The data this business has, it's absolutely insane. Google Chrome, which they might force Google to sell Google Chrome, and there's so many interested buyers that would love to buy Google Chrome. They own Waymo, I believe 85% of Waymo, which is taking market share from a company like Lyft and even a little bit from Uber, although they are partnering with Uber. But they have, one of the, pretty much the leader in autonomous vehicles. I think they own around 85% of the company. They have Google Ads, they have, Google Cloud, they have Gmail. I mean, how many people have a Gmail? I mean, just think about the kind of reach and the kind of businesses that Google owns, which they could potentially monetize in the future. And I just have to mention that they also have a 10% stake in SpaceX, which not a lot of people talk about. And they recently bought the cybersecurity kind of a company, which we don't know what kind of revenue it's going to bring. So if you combine all those things together, you kind of could see that Google knew that eventually that search business is not going to last forever. And over the next 20 years, it might start affecting it in a major way, which is why Google has been diversifying their revenues over the year. And it's much more than just search. But what I believe is going to be the most important part of this transition and the most important business is going to be Google Cloud. Google Cloud's operating margin was pretty much in the negative just a few quarters ago. And now it's around 18% operating margin. It's been steadily growing. It's amazing. The platform in general, Google Cloud, is growing much faster than Amazon Web Services, which I do own AWS. And of course, Microsoft Azure has been growing the fastest. But I think Google Cloud is going to be very important for Google over the long term. But this is how I think about Google in general. And I'm not trying to downplay the risks of AI and risks of all those things. But people love focusing on those stories, but they don't focus on the business, and they don't like to focus on the price they're paying for the business. Howard Marks said, it's not what you buy, it's how much you're paying for what you're buying. And I believe the risks of AI are real on the search business. But I believe Google stock is more than priced accordingly. I believe the stock is priced in for pretty much the worst case scenario of the search engine and for all those businesses. And I'm going to tell you that today. And this is a article I posted on X from Barron's. And Barron's is a very trusted website. They do a lot of research. They publish a lot of articles. And they did a study a few months ago on how much Google would be worse if it was valued separately in different pieces. And they missed Google Maps, they missed the stake in SpaceX, they missed many different things. But they said Alphabet is worth $260 per share, according to Barron's. And I said, even if we take off 50% of the search value, so the search, let's assume AI is real, we take off 50% of their value, we end up with $182 per share, or 20% higher than the current price. So even, that's what I'm saying, like even if you take off 50% of the search value, you still end up with $182 per share. And this is not future value, this is 2025 present value, if Google was valued differently right now. Now, we're not talking about any growth, we're not talking about what those businesses could be worth in 2029. We're talking about right now. Those businesses are worth around $260 per share. And if you take out 50% of the search value, you still end up with $182 per share. And this is how they calculated it. They use 17 times EBITDA on Google search, which I believe is fair. YouTube, 22 times EBITDA, $65 per share. I also believe that's fair. Google Clouds, they use 16 times EBITDA. Now, that's too low if you compare it with other cloud companies, independent cloud stocks and companies in the United States. They trade at 20, 25, sometimes 30 times EBITDA. So 16 times EBITDA is too low, and it was conservative. But they kind of made up for that with Waymo, because with Waymo, they had a very, you could say, optimistic valuation model where they valued Waymo at $325 billion. I think that's too much, but I kind of made up for it by not valuing Google Cloud at a good enough of a valuation. So all in all, if you combine them all together, I believe the assessment was fair. And even if you take off 50% of search, it's still worth $182 per share. But even without using this chart, Google right now is still trading at 16.4 times earnings. 16 times earnings for a company with such moat, for such business model, for amazing margins, for a company that's still growing 18% in earnings per share. 2026 expected expected to be 6%, then 14, 16, 18. I think it will likely be 13 to 15% in earnings per share, and you're paying 16.4 times earnings for Alphabet. I think this is one of the best deals in the market, and that's why I titled the video as Google is presenting a generational buying opportunity. And once I'm comparing Google to other opportunities in this market, I'm just not seeing it. I'm seeing Google as pretty much being the best buying opportunity amongst the quality stocks and the long-term and growth investments in general. So I really like the company here. I believe I'm not trying to downplay the risks. I believe the risks are real in terms of AI and what could potentially happen, but I believe the stock is priced accordingly. And in the market, it's not just what we're buying. People focus on what they're buying, but they don't focus too much on how much they're paying for what we're buying. So I believe Google is priced accordingly, and it's priced well below the worst case scenario, in my opinion. So that's just my opinion on Google, not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.